All right, hello everyone. Obviously another successful day. We didn't lose. That's obvious. I mean, at this point, it's pretty obvious. All right, real quick before I even continue, the biggest haters that I have are people that look like me, terrorist-looking people that look like you just hit a double shift at the gas station or the 7-Eleven. You have the audacity to talk shit to me. You have the audacity. Indians, Pakis, Pakistani people, Indian people, Middle Easterners. You hairy look at you see my knuckles? You see my knuckles? We have the same hairy knuckles, you idiots. Our fathers, our grandfathers, they all drove taxi. You morons. How dare you don't want to like it would make sense. Look. It would make sense if we didn't look alike. If I was some white kid, or you want to be racist, whatever, right? If I was not a part of the culture, and if you wanted to be a hater, okay. I look like you idiots. Like, you have no respect for your people. You have no respect for yourself. And you know what's funny? You stupid, smelly bastards. You know what's funny? I'm gonna be rich. When you're over here talking all this nonsense, your kids are going to find out about all of the schools, the hospitals, and orphanages that I open in your countries that you were too busy. Madrid, he was posting something. I want to see what he. While you're too busy being little losers online, I'm gonna be doing things for the next 50, 60 years. You guys are gonna be idiots. How dare you? Morons. Look at idiots. That sounds familiar. No, just kidding. All right. All right. Anyway, in today's video, we're going to talk about the SP 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields. Idiots, go take a shower. The other thing, you stupid idiots, you morons. You have your email addresses on your YouTube channels, on your pages. You could search that up, find your idiotic Facebook pages, find your dumbass LinkedIn pages, you morons, you idiots. Like, this is how I know you guys have never had any altercation in person. You have no sense of, oh, are you okay? I'm sitting here. I'm going to talk to him. You idiots. You're morons. Anyway, let's start the rest of the video. All right, first and foremost, we had bond auctions today. So bond auctions, basically exactly what I was saying yesterday. The bond auctions caused the equity prices to increase because the longer term bonds started to show positive for the longer term horizon of the US economy. When the longer term horizon of the US economy does well, equities are going to be more privy to increasing. So that's basically what ended up happening today. We had another auction and we rose. Okay. Next, also, of course, today we had CPI data coming out, basically in line, nothing too out of the ordinary, right? But then tomorrow, we're going to have a lot of information. We're going to have PPI data coming out at 8:30 a.m. And then, of course, 2 p.m. federal funds rate. And then 2:30, we're going to have the FOMC statement. So tomorrow could be another sort of choppy day. Okay. So some interesting things. A lot of news coming out Wednesday. Thursday, we have even more important news coming out, right? And then Friday, of course, alongside the PMI data, it's also going to be OPEC's. So as we know, there usually could be a bit of a run up into OPEC's. But then after OPEC's, the market ends up dipping. So we don't know for sure what's going to end up happening overnight. We don't know for sure what's going to happen during Powell's speech. It could just continue to be in line because Powell, you have to understand, it's his job. He has been trained. He has been he's been trained. He's been press trained and like being able to speak to the press and everything and not saying the wrong things. And he's very vague and he says the best things basically to keep the market afloat essentially. And that's what really is going to be a factor tomorrow. Is Powell going to say something completely out of the ordinary, something that he hasn't been saying before? That's yet to be seen. But the point is that holding anything short dated while he's speaking, while all of this news is going to be happening, is very, very risky. So that's why, anything that you do have should be longer dated. So yeah, we're gonna go ahead and see how that is for tomorrow. All right, so the yields, we're looking at the 10-year yield. We could look at the 5-year yield. We could look at the 20-year yield as well, and the 30-year yield. The yields didn't do well because we had the auction. Remember, so the yields didn't do well because of the bond auction, and the bonds did well because the bonds were getting bought out. So this is the 30-year bond, this is the 20-year bond, and with the longer term bonds doing well, that is generally a very good sign for the NASDAQ, which is why, because NASDAQ is growth. NASDAQ judges the longer term horizon of the economy, of the country, of technological innovation. The GDP grows with large tech stocks. It doesn't grow with value. It doesn't grow with slower bank. It doesn't grow with that stuff. So the NASDAQ got the most love because of TLT and the bonds. So so you could see that the NASDAQ has a 0.80% increase. The IWM had a bit of a red day, and the SPY had a bit of a green day, pulled up by the NASDAQ. So now with that being said, right, we know that usually the yields have an inverse relationship to the market, but you know that it's not going to really it's not really going to play as perfectly until basically tomorrow, most likely, is when the price action for the auctions and everything is going to be subsided. Another thing, guys, is today we barely had any option volume. And the option volume was very, very scarce compared to how much it usually would be per day. And a lot of this has to do with the meeting for tomorrow. And all eyes are on that meeting. So there's a lot of rumors that interest rates are going to stop, that they're going to stop raising interest. Like basically people are saying that inflation is transitory. We're starting to see some really, really good news that inflation is going to be gone sooner rather than later. So that's another reason why a lot of the stock market is doing well. So all eyes are going to be on for tomorrow. And hopefully we'll get a better understanding of the yields increasing and decreasing in conjunction to the market. But today, you know, we did have a bit of a red day in the yields. And technically we had a bit of a green day in the market. So things were a bit, you know, inversely correlated. But we had an auction today, so it is what it is. But there's that. Let's go ahead and take a look at the dollar. The dollar had a bit of a red day, and the market was green. So once again, you know, we do have an inverse relationship on the dollar and the market. So when the dollar is falling, generally that is a very good sign for the market. Technically, that ended up playing out today. And of course, the VIX is at levels not before seen. We haven't been down here since since December and January of 2019. So this is before the pandemic, and we are at these levels now. So like I was saying, they can really, really keep it down here for quite some time. That's why we got into longer term puts a little bit higher. That's when I might start entering into some more for shorter dated. But yeah, this is some really, really crazy price action that we're seeing thus far on the VIX, on the overall market. And yeah, we just have to see how much longer they can sustain the upward strength in equities. A lot of bullish catalysts did occur. We had the bonds auctions, we have OPEC's soon, we have CPI data that was basically in line. There were a lot of good news, but we have to start seeing if bad news is actually going to cause the market to fall as well. So I'm excited. You know, and the other main thing that I want to talk about is the tech stocks. So what we have to look at is, first of all, let's go ahead and take a look at the NASDAQ. All right, so the NASDAQ was the biggest winner. It's clearly very, very overextended here. Okay, very overextended to the upside in terms of the Bollinger Bands. And generally, that's not the most bullish sign. if the NASDAQ ends up gapping up, going to be leading a bit short early morning. Definitely we can grab some weekly puts. If we open above like 401 comfortably, if we open above 401 401.50, I'm gonna buy into weekly puts and just hold for at least $1. Those are gonna be fine. And because the market should end up falling back. But if we end up opening red, that would kind of be the best scenario for bulls, because it would be a nice little pullback and an opportunity for a reload, and we wouldn't be that overextended to the upside in terms of the Bollinger Bands either. So keep that in mind for tomorrow. I would be pretty bullish if they end up opening it red, in my opinion. But yeah, so on face value, the NASDAQ is overextended. The bonds had a really positive price action. TLT and the 30-year bonds did well. Now, Apple also did really well. It bounced back. But then we're seeing stocks still holding in their periods of consolidation. Meta did well. Amazon is still consolidating. Tesla is showing some red, but still consolidating. Netflix, it bounced up like I said it would a bit into this candle, right? Not the best looking sign, but then on Google, we're consolidating. So these were big winners that are now consolidating or showing some weakness. And these stocks can still end up skyrocketing upwards. Microsoft, still consolidating. So once again, these winners, these really strong tech stocks are not exceedingly strong. So once the winners end up rotating their money back out into these Microsoft, Google's, Tesla, Amazon, that can really propel the market up even further. So that's going to be pretty interesting. But yeah, and then last but not least, we could also take a look at Nvidia. Nvidia bounced really strong, primarily caused by AMD's strong movement to the upside as well. And AMD is still, I would love for AMD to gap up again, and I will enter into short on AMD. Right now, we can still open up a bit red and still continue up a bit, in my opinion, on AMD. But the safest trade for a swing would be for it to gap up and then re-enter short. But aside from that, we still have a lot of different metrics that we need to see heading into this week. We're at the 464 level. It's still a bit early to enter into shorts. This is a rising wedge, and I would still love for it to basically get a bit higher. I want us to touch closer to 465, 466, essentially. I want it up here. This would be like the best opportunity to start getting into a bit more puts, because we got into puts down here. And if we can get it a bit higher, we can scoop for a little downside play. That'd be nice. But aside from that, I hope you guys enjoyed today's video. Obviously, the levels remain the same. There's really not much to look at in terms of levels. Obviously, 462, 460, 459, 458. Those are like the main levels. And then 465 to the upside is a very major level of resistance. And then 467. 465 and 467 are two very major levels of resistance. If we get to at least 467, 468, that's going to be a really good short, in my opinion. So I hope, I'm going to keep you guys updated. I'm going to keep you guys posted. So, once again, if you guys want access to the Discord, you guys want access to my trades, my thought process throughout the day, all of that stuff, one-on-one, basic, like anytime that you guys have any questions, I'm there, respond and help with anything that you guys need help with. So if you guys want that sort of access, you guys want that sort of help, definitely join. Even if you don't want help, there's a community of really, really good traders inside the group as well. So, it's a win-win situation. So yeah, we'll love to see you guys there. Hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.